When I give my capital to invest and get shares of a company's stock, I share the risk with the entrepreneur. If it does well, the capital, if it does well, do I get dividends? If not, do I lose? My question is, how do I share the risk with companies that I invest in, with the entrepreneurs when I buy shares or stock from another person instead of the company themselves? How does the stock market work? I am really confused. Jazakallah khair, brother, for your question. It can be super confusing how this all works, but I'm going to try to break it down as simple as possible so that you can go away understanding how the stock market works, how shares work, what makes it halal, and different things you have to look out for. So let's use a really simple example. A lot of people have iPhones, they have Apple watches, they have different Apple products. So let's talk about Apple, right? A long time ago, I believe in the 90s, Apple did something called an initial public offering. This is called an IPO. And when any company does an IPO, they are allowing the public to purchase shares of that company for whatever price they set out. After that initial public offering takes place, the shares get bought and sold, generally speaking, between different parties, right? During that initial public offering, people are buying shares of the company from the company itself. Afterwards, because it is a public company, you are buying shares of the company from other people. So let's say I have a friend, John. When Apple initially went public, he bought shares of Apple. And when Apple is making profit, when they are doing well financially, when their expenses are low, John gets a share of that profit. And generally speaking, what happens is the market sees those shares that John owns as more and more valuable. So maybe he bought those shares for $10, $15, $20 a share, really cheap now, but as the products do better, as the company makes more profit, as the company innovates, the market sees Apple as more and more valuable. So instead of being able to buy and sell those shares for $10 or $20 a share, we might be buying them for $200, $300, $500 a share. So how we determine the risk is by how the company grows in value over time. So if we look at it, if you go ahead and try to buy shares of Apple right now today, you won't be buying them directly from Apple. You will be buying them from somebody else on the market who's looking to sell their shares. And they could be looking to sell their shares for a multitude of reasons. Maybe the shares have gone up enough that they don't want to hold them anymore. They want to invest in something that could have higher growth potential. But what's happening here, when you buy these shares of Apple or any other publicly traded company, when that company continues to perform well, the market is going to see their shares as becoming more and more valuable. When the company is continuing to make profit, cut expenses, create new products, create new services, they're going to see extra and extra profit, more and more profit. And you as a shareholder are going to get to share in that profit as long as you are a shareholder by seeing the value of your shares increase. Maybe you bought it for 200, now it's 250, now it's 300, now it's 400. And at a certain point, you're going to be able to sell and someone else is going to see those shares and say, you know what, I want to buy those because I want it to go from 400 to 500 to 600 to 700, etc., etc. So the continued performance of the company will determine the increase in the value of those shares. Similarly, when companies do poorly, you will see a decrease in the value of their shares. So a couple years ago, when Trump was talking about the idea of maybe putting tariffs on Apple because they're not manufacturing their products in the United States, we saw a decrease in the shares of Apple. And the reason we saw that was because the market looked at it and said, oh, well, now iPhones are going to cost $9,000 as opposed to $2,000. Less and less people are going to buy Apple products because they become so much more expensive to purchase. So Apple might not perform as well. So instead of it being worth $200 a share, maybe it's only worth $100 a share.
this is an example. This isn't exactly what happened, but I'm just using this as theory so you guys kind of understand how it all works. So the bottom line you need to understand, the bottom line you need to look at is, unless an initial public offering is taking place, you're not buying those shares, generally speaking, directly from the company, right? Whether it's Apple, whether it's Amazon, whether it's Taiwan Semiconductors, whether it's Tesla. Unless an initial public offering is being made, you're not buying it from that company, you're buying it from someone else who is an owner of those shares. And the way that we determine the value of those shares, the market kind of decides, right? If the company is performing really well, they're making new products, they're innovating, they're bringing down costs, they're increasing their profit margins, investors see that as a good thing. And so a share that maybe was worth 100, the market will see it as worth 150, 200. And so when they sell it to you, they've sold it for a profit. If a company stops innovating, if they have too much expenses, if they are too bloated, a lot of the time the market will see that as a recipe for disaster, and they'll see that as, a company being worth less and less. So I hope I was able to kind of explain that. I hope I was able to clarify how, some basics about how stock markets work and about how shares work. And of course, as Muslims, we should be looking into shares and businesses that operate in a halal way. But that should give you kind of an understanding about how this works. This is very close to kind of a musharaka model of doing business, where when you are buying shares of different companies, you are sharing in potential profits and potential losses, depending on how the company performs and how the market sees the performance of that company. So I hope that answers your question. If you guys have other questions, put them in the comments below there. And if you like the video, if you wouldn't mind hitting the like and subscribe button, helps with the algorithm, helps grow the channel. I want to thank you guys for watching, and we will see you next time.